If you're seeking for $150,000 in business funding fast, but you have bad credit, watch the entire video because by the end of this, you're going to know exactly how to get business funding with bad credit. Two, what mistakes you were actually making. And most importantly, number three, an opportunity so you can finally secure the business funding. Now, before we begin, my name is Daniel Dixon Jr., and I help business owners just like you to put you in position so you can finally secure the capital and make your next big move so you can finally get to the next level, whether that's increasing your profits, becoming an industry leader, or whatever that you desire. I'm here to really put you in position to get to the next level. Now, here's the truth. Almost every funding application will be personally guaranteed unless the lender specifically tells you it's EIN only, or we have big enough assets for collateral. So there's this big connotation. There's a lot of stuff that you've probably been sold to. We call this being sold wolf tickets. That there's this EIN only credit, or there's this EIN only business funding, which there is out there, but most majority of what you're going to be seeing, you're going to have to personally guarantee it. And I'm going to be walking through exactly how to maneuver through that. So there's really no such thing as EIN only funding. And even most banks, right, they're going to require a personal guarantee, even though you're asking for a higher credit line. Let's say you're asking for like 250K, 500K, a million, whatever that it is. They're going to be looking for a personal credit, a personal guarantee. Now, there are a couple of lenders that are EIN only, right? So let's talk about them. Have you ever heard of the Brex or like the Ramp or like the Stripe corporate credit cards? Even though those are charged cards, those are truly EIN only, right? They're going to be looking for just the revenue. They're going to be looking for bank statements, tax returns. Those are the things that they're going to be looking at. They don't do any type of personally guarantee or no credit check with that. Those are truly EIN only. But with those, right, you're all going to find the requirements or even the limits confusing. And they have very strict underwriting because they're not using anything as far as credit. They're going based off of your business financials. So the underwriting, they have to feel like you're actually legit business. You can't leverage the personal credit. So like when you use a personal guarantee, it makes it easier because you can show something else that shows that you can pay them back. But how are they going to fully know if you can pay them back? That's why underwriting is a lot stricter for EIN only funding. Now, the other type of funding that's EIN only is asset based or collateral loans. Right now, majority of these are EIN only. That's why I said these can be EIN only. But with the thing with this, like with asset based collateral loans, like I said, your collateral is basically going to be the assets that you have. Um, and there's way more pieces to the puzzle as far as like how you can actually get those. But trying to figure that out yourself, that's just adding in more stress. And as a CEO, if you're doing above seven figures, most likely you're watching this video. The goal is to remove stress, right? We're not trying to make you go figure out, okay, what are the specific requirements with asset-based collateral loans? Like they're going to be checking a lot of this stuff, like as far as requirements, right? How many years in business? What's your cash flow? What's your revenue? But they're also going to be looking at to make sure that the things that you can use as collateral, if they don't even believe that, you're not even going to get funding. So that's just going to be adding on a lot more stress trying to figure out exactly what that is. So that's what said the goal is to remove stress. We won't be adding more stress on to just, you shouldn't be adding on more stress to try to figure out how to get asset based or collateral loans. All right. That's why we're here to do that for you. But when you have bad credit, okay, let's just get to the point of this video. There's really two options that you really have. Okay. Number one is that you have to fix your credit and qualify for funding. So if you have, let's say if you're trying to go the traditional route with the banks, you're going to need at least a 700 plus credit, a FICO score. And on top of that, a good credit profile, which is separate from the actual score itself, which I'll get into here in a second. The second thing is you can apply for alternative funding, or a lot of the times you'll see like an umbrella beneath that. It's like revenue based funding. Typically with those lenders, right? Those are non traditional, and you'll need at least a minimum of 500 FICO score to get any type of funding with them. So if you have bad credit, the fastest way they're going to be doing this is by this option right here. This is mainly what this video is for. But let's say if you want to go to the traditional route, you want to get 0% lines of credit, you want to get term loans from the bank, you want to go the traditional route. Here's the qualifications that they're going to be looking at. So, like I said before, they're going to be looking at a 700 plus FICO score. You want no negative items, right? No late payments, no charge offs, no collections, no repossessions, no not found in bankruptcy. You want to make sure that you have no negative items. Next, you want to have less than 10% utilization on every single credit card that you have. Don't have a credit card where it's just half of it is used and you have a credit card that's like 3%. And then the average would be like 20, like 21 or 20, no, like 26, 27%, right? You want to make sure that every single credit card is like 10% utilization. All right, every single credit card is 10% utilization. The next one, they want to see you have at least 20K in total credit limits. So you having a total credit limit is, let's just say if you had five or six or 7,000 in total credit limits, why should they give you a 250K business line of credit if you have small total credit limits? Right. Of course, they'll look at other things too, like your financials and stuff. But if you're looking going to the traditional route, the more credit they can show that you can handle, the more likely and the higher limits you're most likely going to be approved for. So keep that in mind. Lastly, as far as the credit profile, have less than three inquiries in the past 6 or 12 months. The more and more thirsty that you look, you're trying to go ask for everybody with funding. You're just making yourself more acceptable to like a risk. What if you default on all the loans that you took out, or if you look like when you look like you're trying to apply for too much credit at once, the banks like the underwriting team, they're literally looking at you like, okay, they're applying for here, they're searching for way too much credit. First off, why are they looking for too much credit? And two, if they've already got loans with other people, let's just say if they default, if you default, depending on let's say what you put on the application, like as far as what like or how much that you're making with your revenue, if you're asking for that amount and you default and you got all these other loans taken or something, why should they trust you to pay them back their cut? Okay, this is what the underwriting team is literally thinking about. It's like, why should they trust you to pay their cut? Okay, so keep that in mind. Less than three inquiries in the last 6 to 12 months. When you have to, if you have bad credit and you want to go through this, you're gonna have to go through some type of credit repair program, whether that's removing your negative items, right? Adding on certain accounts, increasing your credit limits. These are things that you're gonna have to do in order to qualify for the 0% lines of credit or the term loans going the traditional route. But not only is the credit profile that we saw, they're also looking at your business financials. So if you want to request higher lines of credit or like a line of or like a line of credit for a higher limit, okay, they want to see you at least 2 years in business. And this is the traditional route. They want to see at least 2 years in business. Some different programs like I've talked to some bankers, like Wells Fargo, they have a program if you're less than 2 years. There's a lot of other programs out there that you can get a business line of credit specifically for people that are less than 2 years. So we have the connections with the banks. We're getting the intel, we're getting the data. And so the business owners that come to us, they don't have to worry about which bank is doing what. We place them with the right connections depending on what access to funding that they need and what they qualify for. So we take care of all the guesswork and all the confusion for you. That's the value of our services, right? So having 2 years in business. Next, tax returns, and they're going to ask for bank statements if you want higher lines. And finally, real bank deposits. Now, in your business, I already know that you're having real bank deposits, but for the people, right? If you're struggling with if it's challenging for you to get lines of credit or for you to actually get the funding, when you send over the bank statements and they're like, oh, this is unverifiable, we can't. The reason why they can't do that is because you're not showing consistent cash flow, or you're showing that you have money in the bank account, but it's not from real it's not from your business. Maybe you're transferring like internal or external deposits from different bank accounts, right? Or you're just throwing money in there for personal accounts. Like that doesn't count as a real bank deposit. So what? So if you're going to put in the application, or you're saying that your business makes 1 million, but the million is really just internal bank deposits from other different accounts, that's not showing real consistent cash flow, right? And then on top of that, if you're not having actual liquidity, like banks love lending out to people. Banks love using liquidity. So the more liquidity that you can give them inside your banks, okay, like real cash flow, they're going to lend you more. So if you're coming out a month not having this cash flow, your average daily balance is low, right? At the end of the month, you're showing negative. Yeah, you're not a good candidate for funding. So having real bank deposits and having positive cash flow months, that's going to increase your chances of getting the funded. All right, that's on you as the business owner. Now, for the alternative funding, right? This is going to be the fastest route. This right here is the fastest route. If you let's say you have bad credit, but you do have the financials to prove it, let's talk about the qualifications. Let's talk about the requirements here. So minimum, you would be making at least $20,000 a month. You can get away with 10, 15, some lenders can do that, but at least minimum of $20,000 a month. As I'm talking to you, right? You're already doing probably seven, you might be doing eight. Okay, you're making at least minimum $100,000 a month, right? So at least minimum, but if you're like a startup, at least minimum $20,000 a month. As your FICO score, you can get away with a minimum 500 FICO score because this is alternative, right? This is non-traditional. So the banks, they're going to be looking more stricter as far as the credit score. Well, you can get away with a 500 credit score and get approved for those types of things. Now, if you're looking for like a line of credit or something higher that's unsecured, they're going to want to see at least a 600 minimum FICO score. So you might have to end up fixing your credit if you're below the minimum FICO threshold. Next, at least minimum of 6 to 12 months in business. But if you want the higher lines and lines of credit, at least 1 year, but most ideally, they want to see at least 2 years in business. And on top of that, right, they want to see your tax returns. So depending on the product type in the offer that you're requesting, right, some of them you might not need tax returns. So let's say if you go for a merchant cash advance or some other type of term loan or whatever that it is, in the limit that you're requesting, they might not need to show you might not need to show your tax returns. But if you're requesting a higher line of credit or something as far as like high, like a high home loan term or equipment finance, whatever that it is, you have to show your tax returns to show that your tax returns are actually showing profit, right? Lastly, your bank statements. So showing real bank deposits. I just talked about this. If you're having internal or internet bank transfers, or you have different payments coming to your bank account with like that's unfamiliar from like the actual merchant that you're taking your payments from, anything like that, that's going to raise a red flag to the banks, and they're going to ask these questions to verify. And if they can't verify it, then best believe that you're not getting the funding. Another thing is untracked peer-to-peer invoices. That's what P2P stands for. So if you're taking the payments from like Zelle, let's say Cash Buy, if you're making, like I said, you're probably not taking Cash App, but this is for the reasons why you can't get funding. If you're taking invoices from a P2P invoicing system, you're not keeping track of what the invoice was for, right? That's going to be a reason for denial, and that's the reason why you can't go get funding, right? So your reality of not getting denials, right? And then the reality of not being able to, get it to the next level, not being able to invest your business, that's going to continue being your reality until you actually fix these things right here, right? Until you actually fix your credit score, until you actually have the proper financials and know and understand what these banks are looking for. That's what they're looking for. And another important thing too is that when you're actually looking for alternative funding, depending on which product that you get, what I'm saying, these products can be weekly or bi-weekly repayments, sometimes daily, depending on which type of product that you get. So if you have the bad credit, you need it fast. Understand that whatever product that you get, because it's not traditional and everybody likes lines of credit, everybody likes 0%, right? Your payments are going to be monthly, but alternative funding, if you're okay with that, which is fine, and you have the bad credit, but you can deal with, right? Your payments can be weekly, bi-weekly, or sometimes daily. We understand that's what it's going to come with. And like I said, these are non-traditional. So your repayment is mainly on fixed terms. If you go the traditional route with a line of credit, right, your repayment is based off like the interest. It's based off like what you spend. But if you take out like a line of credit, a non-traditional route, your repayment is going to be most likely fixed majority of the times. So that is how you're going to get business funding with bad credit. You just have to understand that if you're seeking for like 150K plus or whatever that it is, understand that if you hear all these gurus talk about, oh, EIN only funding, you have to understand that there's very few instances where EIN only is true the case. And I'll give you some examples like the corporate cards, right? Or if you can look for asset-based and collateral loans. But if you can't prove this, the only two options that you're really going to have is you have to fix your credit and qualify for funding, or if you already have the financials, okay, you can apply for alternative funding and have a minimum of FICO score. If you have a minimum 500 FICO score, you can qualify. That's about as low as they're going to get, right? And these are the qualifications that they're looking for. And if you're looking for alternative funding, if you don't have the 500 credit score, that's fast. So, like I said, we mainly focus on the traditional route. But if we're not going to take away, if you have, if you're making a lot of revenue, and it makes sense to add this on, because if you have a lot of revenue, but you have a bad credit score, one, it's just like we're leaving out funding for you to go get. And it's just like, that's just less opportunity for you to actually go make an impact and for you to invest to the business. So we're going to add it on by, adding on this service. adding this on so we can help you to expand our options to where like we can actually go get the funding from. So now you can finally go get the funding and get to the next level. So we will help you secure your funding based off the needs that you have in the business. So that's why it's important that, you know, when you put the call below first, or when you put the call below, you're going to fill out the short application. And then once we fill out the application, you're going to be transferred into exactly what your business needs. And then we end up hopping on a call with me or somebody on my team so we can finally help you and get you need. But like I said, if you're looking to seek 150K in business funding, you learn exactly how to get business funding with bad credit, what mistakes you're making, and the opportunity to secure business funding. So again, the opportunity that I want you guys to do, I want you to click the link below, fill out the application so we can hop on a call, see what funding options are best for you so you can finally make the next move and make it more impact and get to the next level. If you guys like this video, I want you to click the like button if you haven't already. Go ahead and click the subscribe button below so you get notified whenever I post, and you get notified whenever I'm dropping the gems in the sauce for y'all. With that being said, I'll see y'all in the next video.